Hey everyone, welcome back to your weekly market outlook. This is for the 26th of May, 2025, final week of the month of May. And let's take a look at last week's numbers. And obviously for Australia, this is very important. We take a look at the interest rate decision here. I got a 25 basis points cut. There was talk about a potential of a 50 basis points cut that was actually discussed last meeting there. And I think for Australia, we are going to be potentially looking at a lower rate towards the end of the year here. We're currently looking at about 3.1 to 3.25% interest rates by the end of 2025 for Australia there. Inflation numbers in the UK picked up by a lot, 2.6% to 3.5%. Manufacturing numbers, it doesn't have a lot of impact into the market there last week. And obviously the UK's retail sales number, we saw that a little bit of an improvement as well, but I think last week's, again, it's back to Trump and his tariff threats to the EU, which he announces on Friday and basically pull it back out after 48 hours. So there we go. Another fun day with Trump there, always interesting. All right, this week, Monday, it's going to be a quiet day. The UK market is going to be closed for spring bank holiday. The US market is going to be closed for Memorial Days. So yeah, we don't actually have anything going on until about Wednesday for the Australian inflation number there. And I think what's really important is obviously the RBA's interest rate decision as well. 25 basis points is going to be expected. FOMC meeting minutes, I don't think this is actually going to have a lot of impact on Thursday, Ascension Days. Obviously, the European market is going to be closed. So just keep that in mind. And, you know, if we take a look at what's in store for this week, the PCE numbers is going to be there on Friday, but I don't think this is actually going to be anything significant. We had pretty much all the FOMC members came out last week and say the current situation for them to make a decision, it's near impossible for them to make a decision. So the earliest dates that they indicate a potential for any changes to interest rates is going to be in September 2025. So obviously that's still a long way to go at this point in time. All right, let's talk about currencies here. Australian dollar is going to be flat. We are currently stuck at that 65 range there. We're going to be looking at 66 cents as a resistance, 64 cents as a support. This is overall stuck at this point in time. The euro, I think this could gain a little bit more here. Again, with the downgrades in the US, Trump's instability at this point in time. And obviously with the new big beautiful bill that was just passed by House there, awaiting approval by Senate. Obviously this is something to talk about because instead of cutting spending in the US, this bill actually increases spending to $5 trillion, and cutting back on Medicaid here is actually going to do a lot more damage to the low income tier in the US. And this is basically the reason why we're looking at a little bit of instability in the bond markets in the US, as weakening the US dollar. I think there's a lot of distrust in the current state of the US economy under Donald Trump and his unstable decisions at times. So we're looking at that flow into the euro. That flow of money is coming into the euros there. The bunds are improving in Germany. And obviously this is going to be supportive on the euro at this point in time. Again, we still need to clear off that 1.15 level for the euro. But if we take a look at the stochastics and the RSI and the current positioning and the current structure of the market, we're technically still in a very strong uptrend on the euro here. Similar thing with the sterling here. Sterling has cleared a lot of the other blocks. The RSI is already pushing up higher, above 60. In fact, it is potentially even crossing above 70 at this point in time. We cleared off last year's high as well. Price is currently facing resistance at 1.36, but if we clear 1.36, then we're going to be looking at 1.37 and 1.38. On the flip side, we are going to be looking at 1.34 and 1.33 as our strong support on the sterling. And dollar yen obviously is something we talk about, that we are looking at a weaker US dollar. That was about 2 weeks ago. It was kind of rejected at the Ichimoku cloud. The current projection still points for further movement to the downside. We got a little bit of support there, currently at 142, but once we clear off 142, There's actually nothing holding this down until about 139, 140 level on the Dow Japanese yen. So yeah, that's pretty much it for this week. We're still on track for a potentially weaker US dollar. So I think that's going to be the tone going forward. Now, in terms of whether or not the market is stable, market is not going to be volatile, that's kind of impossible at this point in time with how Trump is acting. I don't think we're going to get any clarity until July 9th. Again, that 90-day pause wasn't a good thing. It was more of a chaotic curse for a lot of intraday traders. So, look after yourself out there. Good luck to trades, and I'll see you soon.